Stanley Druckenmiller says that he loves treasuries right now, even with crappy interest rates. Well, that's not an exact quote. This is Brian Lewis with MMT Investing, and things just changed. So let's take a look at treasuries and see why he maybe loves them. Now, I already mentioned, let's get some drawings going. So we have the S&P going dead cat, crash, bull trap, and treasuries have been magical, up, and they ignored the dead cat, but they did come down with the big part of the crash that looks like a little bit of a sell-off for margin calls and right back up. So this is a less volatile look. It's similar to the way that gold is behaving, in that it is pulling down with the crashes and then going up with the ups, but it is way less volatile and it has a general uptrend. So this is a very cool idea right here, and I can see why Stan might like these. So as an idea, maybe smash that like button right now to help me out with the YouTube algorithm. Maybe these are, well, if we're looking at another down move on the S&P right now, that would probably be a down move on treasuries in the short term. So I think treasuries are a really cool idea to hold throughout the crash because it's a general uptrend that looks similar to gold with less volatility. And similar to gold, it would be a better idea to buy it at a bottom than at a top. So this treasury plan might be part of the long package, which would be gold, healthcare, corporate bonds, treasuries, and then maybe something like Tesla. For the long once we get to the bottom, but right now we're on top of the bull trap, and those are not good until we get down here. And also I mentioned that in a previous video, I mentioned that you can actually buy your own treasuries. You can open your own treasury account directly at the Fed. You can go to TreasuryDirect.gov and you can open a treasury account, which is effectively just opening a personal savings account at the Fed. And that is the least counterparty risk you can possibly get with a checking or savings account is a treasury account at the Fed, because the Fed is not a bank that can go bankrupt. The Fed can print their own money, and whatever amount they owe you, they'll just print it and give it to you. There's almost zero counterparty risk with the Fed. But you have to pick a time length on your treasuries. So say you get a 3-month treasury, you can't use that money for 3 months. It's locked in there. And then after that ends, you could roll it out into a zero interest account, or you could roll it into another treasury. So it's not liquid. You have to pick periods. But if you trade treasuries, there's a little bit more counterparty risk if you get a treasury ETF. So the ETF could potentially go bust, and you just have sort of a contract to a treasury. You don't actually have the treasury. So there's more counterparty risk if you're trading these ETFs. But also with the ETF, cool thing is you can get 7 to 10 year bonds, which have a higher return rate, and then you can day trade them. You don't have to hold on to the thing for 10 years. I mean, you could just trade them like anything else. So that's a look at how treasuries work and why Stan Druckenmiller loves treasuries right now, even with really low interest rates, is because they just are winning. It's a really good long, and it's a better long from a bottom. And I agree, Stan. I agree. Please hit the like button. This is not financial advice. Go do your own research and don't blindly trade stuff that I say. Happy trading.